Korean exports plunged by the biggest margin in 6 years last month. The heavy fall largely comes on the back of weak demand in China. Kwon Soa reports.
With outbound shipments only reaching $39.3 billion, there's little surprise Korea's exports posted yet another negative growth this August. Korea's trade ministry says the situation is pretty bad, as it is the first time since 2011 the monthly figure dropped below $40 billion. Export growth last month was down almost 15% from the same month last year and was also a huge decline from July. Also, with imports dropping to even lower levels, more than 18% year-on-year, Korea posted another trade surplus for the 43rd consecutive month. The Trade Ministry attributed the decline to low crude oil prices and sluggish exports in the shipping industry, which dipped to more than 50% on-year. Another factor was weak demand from China due to its slow economic growth and the recent Tianjin port explosions. But there is some good news on the China front.
Recently, Korea's consumption sector has been doing well in China. Exports in new products with high potential, such as OLED and FHD displays and cosmetics, are growing rapidly.
Another positive factor could also come this month with the U.S. Central Bank's decision on a key interest rate hike expected soon.
If the US raises its interest rate, that's proof that the US economy is improving, meaning Korea's exports to the US could go up, as well as due to a weakening Korean won against the dollar.
Along with those expectations and soon-to-be-released new cars, the government says September's figures look to be better, but it will not be until after then that the effects will show. The Trade Ministry says the final quarter usually accounts for around a third of yearly exports. That's why it's too early to predict whether Korea will reach its annual trade volume goal of $1 trillion. Kwon Soa, Arirang News.